Hello, welcome to the European Open briefing for Wednesday, June 28th. I'm Rafi Bajan, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So we're seeing some major moves this morning, which was pretty much a follow-up from yesterday in US trading. The dollar, although it made some solid gains yesterday, it was later hurt by the decision by the US Senate to delay that vote on the healthcare bill. The euro, though, is one of the strongly performing currencies. Both yesterday and today, it's surged to one-year high after ECB President Mario Draghi signaled a possible shift in ECB policy soon. The pound, on the other hand, mostly benefited from the euro's gains, although it's being currently weighed by the Bank of England's decision to tighten credit controls in the UK. And we're also seeing the Kenyan dollar make solid gains as well. It hit a 4-month high against its US counterpart earlier today, following some more hawkish remarks by the Bank of Canada, as well as further gains in oil prices. But let's start with the dollar now. We can see here that the dollar yen has been steadily rising this week. It did hit a 6-week high of 112.46 yesterday. That came after stronger than expected consumer confidence data. The Conference Board's Consumer Confidence Index rose unexpectedly in June to 118.9 from a downwardly revised 117.6 in May. Forecasts were for 116. We also had Fed Chair Janet Yellen speaking in London yesterday. She pretty much reiterated the Fed's view and her own view as well, that we will continue to see gradual increases in US interest rates, and that they will be reducing the balance sheet at a gradual and predictable pace. There were some concerns because she made some comments on asset valuations as well, saying that they were somewhat rich, and that did hurt equity prices both in the US and in Asian markets this morning as well. Yellen's comments follows actually that of Stanley Fischer, the Fed Vice Chair, and San Francisco Fed President John Williams, all of which who yesterday made some comments about US asset valuations being somewhat overpriced. But the main factor weighing on the dollar, though, was and also equities as well, given that equities are also dependent on the tax reforms. The US Senate, the Republican leader of the US Senate, decided to postpone the healthcare bill vote until after the July 4th recess because they feared that they weren't going to get enough support from Republicans in the Senate to make sure that the healthcare bill passes. And this is yet another delay to the healthcare bill, and that would potentially lead to delays to the tax reform plans. But although the dollar yen, we can see here it drifted lower, it has bounced back at the moment. The dollar index, though, is mainly being driven down by strong gains for the euro. It actually hit a 7.5 months low of 96.27, but we can see the dollar is currently being supported by rising US Treasury yields. We can see the 10-year yields at a 4-week high at the moment. Let's move on to the euro now, because that's been the main story during the past day. ECB President Mario Draghi somewhat suggested that the central bank could soon be adjusting its policy to basically in line with the eurozone recovery. The euro hit at 1.1383 a short while ago. That's the highest since the day after the UK Brexit referendum. It's also up against the pound and the yen. It hit at 0.8879. That's 7.5-month high against the pound, and a 14-month high against the yen of 127.78. So the main story is Draghi. He was attending the ECB's central banking forum in Portugal. He said deflationary forces have been replaced by reflationary ones, and he blamed low inflation in the eurozone currently mainly down to global factors. That suggests that he expects inflation to pick up, because the reason why inflation is low at the moment is due to transitory factors. And he spoke quite a bit about making gradual adjustments to the ECB's policy parameters as the economy recovers, so that he could potentially be paving the way for tapering of the ECB's stimulus program, perhaps as early as September. So that explains why the euro is surging in forex markets at the moment. The pound did also benefit from the euro's gains. It hit a 2.5-week high, 1.2858 yesterday. It's somewhat fallen back at the moment, around 1.2825. We have the slightly weighing on the pound is the Bank of England announcement yesterday that it is raising the bank's counter-cyclical capital buffer for UK lenders from 0 to 0.5%, and it will rise further to 1% by the end of the year. This is mainly due to concerns about rising consumer debt levels in the UK. The capital buffer had actually been reduced after the Brexit vote to cushion the UK economy from the impact of the Brexit decision. But now, given the resilience of the UK economy, the bank now feels like it needs to act on excess lending. But as I said, the impact, although it's somewhat weighing on the pound, the impact seems to be rather limited at the moment. The Canadian dollar, we can see in orange here, did rise to a 4-month high, 1.3127 against the US dollar yesterday. It's benefiting from rising crude oil prices, which are moving further away from their multi-month lows last week. We did actually have a build in US crude stocks according to the API report. But for now, it does appear that crude oil prices are benefiting from short covering. US crude briefly rose back about $44 a barrel before pulling back just below it, currently trading just below that level at the moment. But also helping the loonie yesterday and today is the Bank of Canada Governor Stephen Poloz, who once again said that the rate cuts in Canada have done their job, suggesting the next move will be up. Let's look at today's economic calendar before we go. The main data will be pending home sales in the US and crude oil inventory data. But also we have more central bank heads speaking in Portugal. There will be a panel discussion being attended by Mario Draghi, Haruhiko Kuroda, Mark Carney, and Stephen Poloz. That's due to begin around 13:30 GMT. That's it from me. Thank you very much for watching and have a great day.